Are you trying to be rude or are you trying to be disrespectful? I'm sitting here talking about how cold it is. Walter goes, can't relate, can't relate. I hope you get a cold front, motherfucker. All right. I'll just he said Miami by the pool. All right, yeah. I hope you get a cold front. Just wait until the next flood. Just wait until Brickell's underwater again. All right. No, I'm gonna come for your neck then. All right, we're getting this correction here. Now, let's be honest, because I have two zones, kind of we have this the higher of the two zones right here. Wait, actually higher time frame first. If we go back to this 88.6 markup, this is mostly for the members. So if you guys see all the rejections here at the 88, maybe I have to delete this fib. Okay, so then you see the market came down to TP1. Beautiful rejection. I told you guys, if the market's going to break the zone, it's going to come to the zone, reject it, and then crash through. Same thing on this side. We haven't hit the 38 fib yet. So here's the TP2, and we're sitting right above it. And so I think we're going to come up for a correction right now and then end up crashing down until we hit that second take profit zone on the higher time frames. So that's the bigger picture, is that the second take profit is about, call it 350 to 400 points away to the downside. Plenty of room. Plenty of room. Okay, let's get down here to the smaller time frames, see if we have a re-entry opportunity. So the two re-entry zones would be honestly right now at this candle, or ideally it would be the double top at the 88.6 right here, which is another 40 points to the upside. For me personally, it's always worth waiting for that push to get to a much more preferable entry zone. A lot of people are like, yeah, but what if it doesn't make it up there? It might not. You're not guaranteed an entry, people. You're not guaranteed a price. I mean, you could be guaranteed an entry. They'll enter your broker will put you in anywhere that you want, but at what cost? And some people are candlestick traders and they'll say, well, actually, the candlesticks look like this. And it doesn't look like it's going to come up. We never really know. The only thing I do know is that there's about a 50-point difference between my ideal entry and where price currently is. And if for some reason the market does want to come up for a retracement, I sure as hell don't want to be caught in that. Okay. If the market comes up to this ideal entry right here and then starts to climb up, I know the trade's probably not going in my favor. You get what I'm saying? And so the drawdown is like an indication that the trade's not going my way. Over here, if I enter, just because I'm in drawdown doesn't mean the trade's not going to reject and keep going. Being in drawdown is not an indication that I'm doing something wrong. In that case, except for, if I enter prematurely, if I enter early, then I did do something wrong. And in which case the drawdown is telling me, right? To keep this simple, I'm going to wait. It's either going to hit this entry zone or not. Now, there is a higher entry zone as well, because if I draw my fib from the high of this kind of whipsaw that happened yesterday during the New York session, then our 88.6 is about, call it about 150 points away. And that's a lot of drawdown. And so what I'd like to do here is instead of just holding a massive amount of drawdown, I'm going to enter at the first zone and then set a stop loss above this area, probably above these wicks. And then if the market violates this area, then I'll just re-enter for the second trade. And that second trade, because of the risk and reward here, if we're going to do like an accurate risk and reward, if we're going to be truthful about this, it's still like at minimum, we're still talking about a 2-to-1 R&R. Ain't that beautiful? So you lose one, it's okay. You win the next one, it'll make up for it. That's the nature of trading, anyways. And if you win the first one, great. No losses to make up for. Everything is right in the universe. Good morning, everybody. Good morning, Giordano. Good morning. Good morning. Let's take a look. Today is a pretty heavy news day, if I'm not mistaken. Last time that we were on the stream, how do I look up Forex Factory and Trade Evade comes up first? Just know that their SEO their marketing team needs a raise, bro. Shit. How do I look up Forex Factory and Trade Evade shows up first? Insanity. Okay. So, okay, I see what's happening here. I believe we're getting some late data because of the government shutdown. I think this is October data released 39 days. Oh no, these are the adjusted. Okay. What a shit show. This already happened an hour ago and we've barely had any movement. Wow. Okay. In the past hour, we have the ADP weekly unemployment change or weekly employment change, excuse me. We've had average hourly earnings on the monthly. We've had core retail sales the month over month. We've had non-farm employment change on a weekly. Why is there two non-farm employment changes? Oh, this is the revised data from October. This is the weekly data from the week over week. We have retail sales on a month by month that came out. Core retail sales came out better than expected. Interesting. This is the release date is delayed by 30 days because of the government shutdown. Dude, why do I feel like there's something really scammy going on with the Trump administration basically using the shutdown to delay all this data, and so it looks better going into the new fiscal year because a lot of this stuff is delayed, and so it just kind of gives people a false sense of optimism. Okay, this is why we wait. This is why we wait. Beautiful. Absolutely beautiful. Okay. I'm gonna paper trade this on TradingView. I'm gonna pause my screen share. I'm gonna hop on over to Trade Ovate trading mode. Yeah. Oh, logged into the wrong account. Okay. All right. So, data is delayed. We've had retail sales, core retail sales is coming out 30 days late. And so I guess car sales, like everything except for car sales, is doing better because core retail sales, the difference between core and the headline includes car sales. Because of the tariffs, we have heavy tariffs against the European car manufacturers and the Asian car manufacturers. And so I guess that's kind of drag down the main number, the headline number. The unemployment rate starting to rise. The unemployment rate is something that we talk about a lot. And if we head over here to the Fed website, I know I'm gonna keep an eye on NASDAQ here. What I'll do is actually just put an alert above price, an alert below price. That way we get a notification if it does want to break the range. Okay, let's get over here to the Fed economic data website and let's take a look at what did I come over here to do? Oh, unemployment. I want to show you guys how unemployment is usually doing really well until unemployment rate. We need the rate. Okay. So the gray bars represent recessions. Everything else is just sort of, the actual chart of unemployment. So the x-axis, dude, I'm fucking this up. X-axis, date, y-axis is the percentage. On the very, very low, the lower bound down here is about 2.5%. So the unemployment rate at about the lowest level that it can be is 92%. Let's call it 93%, or the unemployment rate is at 3%. The employment rate would mean it's at 97%. So the full capacity of a country is the total productive, like, oh, I guess the total production. If everyone is operating, if all the people who are willing and able to work have a job, That's full capacity. When you're operating with a little bit of slack, when there is, I'm trying to find the easiest way to explain this without getting derailed. Look, long story short, right before a recession, the unemployment rate is usually dirt low. Things are looking really good. Everybody seems to have a job. And then within 1 year, so you see like when the unemployment rate peaked right before the dot-com bubble burst, it was around April. A year later, and let's go to April over here, April of 2021, we were already in a recession. Okay, when right before the '08 financial crisis, unemployment rate bottoms out about May 22, May 2007. Let's go to May 2008. By May 2008, we're already in a recession. Is this starting to make sense? Let's kind of zoom in here to COVID. Right before COVID, we had record low unemployment rates, around 3.5%. Okay, pretty low. This was one of those quick recoveries because of obviously the nature of COVID. But, when we had actually bottomed out down here, kind of near December 2019, January 2020, and by 2021, we were still in that recession. And so I want you guys to pay attention to that same trend right now, is that we had a bottoming out process where where the unemployment rate has hit the bottom. And well, I guess this has been a pretty long one. Let's see. We went up a little. God, there really aren't any good examples unless we're about to go into a recession, or unless we are in a recession. It's like we've kind of bottomed out here, September, October 2023, which means that we kind of entered a recession late 2024. We've been in a recession this whole time. I think the only thing that's lagging is that unemployment rate. And because we're at the absolute lows, I think we are due for that recession. 2026, that's my prediction just based on the unemployment chart. Oh, boom. Okay. If anybody who took the shorts on the Zoom call? Who took the shorts? Good morning, everybody. Make sure to drop a like and subscribe if you're on YouTube. If you guys took this trade, go ahead and let me know. The shorts at the 88.6. Fib was drawn from this swing high to this swing low, missed the first 88.6. And so I basically was just looking for a retest. Not bad. Not a bad day in the office. Go ahead and move that take profit zone first. Close partials. Go ahead and move the take profit zone all the way to the extension. Okay. Pretty straightforward. Go ahead and move the stops to just above the previous highs. And then in a second here, we'll get to move those stops down to break even. Yeah, and Pop, shout out to this Jamaica House coffee, whatever it is. This stuff, this stuff is the truth. All right, peoples. You guys did nobody else take it in the chat or no? Oh, actually, I just saw the messages. Beautiful. I don't know why I didn't get the message notifications. George says he's in. Walter's in. Walter said just got out. Yes, sir. George says trailing stop loss. Beautiful. Chart addicts, I'm assuming that that's you, Omi. Versus entry at 337 on the futures chart. Let's go ahead over to futures. Said 337. Ooh, savage. Savage. That's right here. That's right there. Beautiful, bro. Oh no. Beautiful, beautiful, beautiful. Giordano says, didn't take it, waiting for this. Yeah, I had that higher zone too, but it's possible. It's very possible. The only thing is the higher time frames. The higher time frames really looks like it just wants to keep running. Just hit that alert. This is where I'm going to have to move the stops to break even. And then just trail the rest. All right. Boom. I don't have a good track record entering in the middle of the range. Of course, of course. I mean, the thing is, like, it's you have to know what's a scalp and what's a longer term sort of swing move. If you are going to trade in the middle of this kind of like week, this is just yesterday and today's data. That's it. It's a very, very little range. We don't have much to work on. We haven't even really established a clear resistance yet, besides this one candle. And so you have every right to be patient and want to wait for the higher range. I personally not sure that we're gonna make it all the way up there because Geo Zone is all the way up here. It's above all this, which is very possible. If it does break all these, that'd be the third entry. This is entry one, excuse me. Entry two, which will make this entry three, right? But as of right now, trade's still valid inside of this current weekly range. So just gotta wait it out. Technically, this is the high of the weekly range so far. Wait, Monday? Oh no, this is the high of the weekly range. I'm bugging. Eh, I feel like if we're gonna make it all the way up, it's like there's two options here. It's buy down here, sell up here. Everything in here is just yeah, you're right. It's a middle of the range, rather risky. This is actually a much better perspective on this. Let me see if I can actually go to a blank chart. Yeah, this will be so much easier to see. Let me go ahead and just delete everything. Put the top and the bottom right here. Gorgeous. And then let's see. I'm gonna add a few fibs just to check these levels. 50% fib. Got the 61 hasn't even been tapped yet. Geo, by definition, we're literally smack dab in the middle of the range. By literal definition. Okay, so 88.6 up here. Personally, this is still possible, but it's getting a little riskier after that first rejection and then it filled. Not really the best sign. Not really what you want to see. Still valid as of right now. And then this would be the second entry zone. Bit wider of a stop, but also much larger TP. Let me pause this. Let me go check my trade evade real quick. All my stops hit and break even. Nope, still have one contract running. Lord have mercy. All right, let's say. Let's see what she got. Good morning. I took the trade. Good. Did you get out? Is the question. Uh, I did jump in. I did jump back in. Yes. An entry sitting at, hold on, let me check. 358. Ugh, not the best. Not the best showing. 358. Caught it on the way back up. 373? Savage. Savage. 373 is savage. And now we wait. Oh, no, that's a rejection. Bro, if I had 373, boy, I'd already be out. Hey, I need me about 20 more points. Oh, shit, I guess that coffee ain't that good. I'm still yawning. What's on you guys' mind, man? What's up? What's up with the what's up? What do you guys want to know? The economy? Should we go through this economic data? Is that what we should do? Unemployment rate getting cooked. 4.6% is cooked. I know that's a new economic term that you guys might not have heard of. You know, if you guys study your master's program in economics, you'll hear that term cooked. It's a colloquial term, a description. of a pre-recessionary event, whereas there's a tailwind of forces, of mechanical forces working throughout the economy. There is this tension with the tariffs. There's the price pressures with the supply chains getting screwed. And then there's also the potential fear of a recession playing on the social spending habits of the citizenry. And that all leads to a perfect concoction. If you look at the equation, it all summarizes into cooked. Okay? Shout out to Dr. Schrodinger. Cooked, LLC. For you guys who haven't caught on, yeah, that whole thing was a fucking joke. No, the term cooked is not a colloquial term of use in modern economic theory. Might I just have to rewrite economic theory just so that we have some inclusion for the term cooked? Because the only way to describe a 4.6% unemployment rate after we just hit bottom's been chilling at bottom. You guys remember the whole example about how it bottoms out before we go into a recession? It's happening now. We're going into a recession. So if they don't include the colloquial term cooked, then what else is apt enough to define what we're seeing right now? Roy, can you explain the science behind the 88.6? How'd you come up with the 88? Brother, if I said that, it had to be as soon as we get off the YouTube. But long story short, a lot of blood, a lot of sweat, and a lot of tears. But basically, if you took the class, like I kind of break it down. Matter of fact, I'm about to get off YouTube just so I can explain this, so we can do something useful. If you guys are on YouTube, make sure that you guys join, become a member. I think we're opening up the members VIP chats here pretty soon. So if you guys want to head over to the website, the link is in the description. Become a member, hop on over for these kinds of conversations. Are you trying to be rude? Or are you trying to? So that's all I got. Okay. To happy and safe trading. If you guys are on YouTube, make sure to drop a like and a subscribe, or just go ahead and come join us over on the VIP side. What's the worst that can happen? You learn a thing or two. All right. 88.6 strategy, dude, is I used to enter at every fib